So, should you be buying Ethereum right now? Well, here's 10 key points explaining why ETH is still one of the best long-term bets in crypto and how it relates to Bitcoin, altcoins, and overall macroeconomic conditions. Point number 1. Ethereum's tech and ecosystem still dominate. Yes, there's been some Layer 2 fragmentation. Yes, rising competitors like Solana, Cardano, etc. have gained some traction. But the fact is, the Ethereum virtual machine, or EVM, still dominates. Most chains are EVM compatible, and even non-EVM chains use EVM-based MetaMasks, RPCs, block explorers, and DeFi tools. This means billions of users are still interacting with the EVM on a daily basis. And as long as Ethereum maintains its lead in this regard, ETH should continue being the top dog in the altcoin space. Number 2. The ETH-BTC ratio is near historic lows. Ethereum has somewhat underperformed Bitcoin over the past year or so. As a result, the ETH-BTC ratio has neared its 2019 lows. Historically, this is a prime accumulation zone for ETH-BTC and a good time to buy ETH. If we use the log scale and draw a trend line, we can see that returning to the 0.05 ETH-BTC level would mean a 160% outperformance versus Bitcoin. That might sound impossible, but remember the 2017 cycle, ETH once outperformed BTC by 200% during the ICO boom. And even if ETH-BTC returns to just 0.06, that'd still mean a 120% outperformance versus Bitcoin. Number 3. Global liquidity equals altcoin performance. The simplest way to make huge profits in crypto is to understand ETH's relationship with global liquidity. In other words, when central banks, especially the US Fed, inject liquidity into the markets, or pause QT, quantitative tightening, bad things happen for the dollar and great things happen for altcoins. This includes ETH. Conversely, when central banks reduce their balance sheets and drain liquidity from the markets, altcoins get crushed. Look at this chart. Since 2000, ETH, BTC tops and bottoms have almost perfectly aligned with Fed liquidity injections and drain-offs. We are currently in a period of QT, which is why altcoins are getting crushed. However, the Fed has already announced a slowdown of QT to just $5 billion per month, and they'll likely pause altogether between May to October 2025. This is the calm before the storm, and when you should be accumulating ETH. Number 4. ETH is a digital commodity. Out of all the altcoins, Ethereum is the closest thing to Bitcoin in terms of becoming a digital commodity. This is because ETH has a scarce supply, a decentralized validator network, legal commodity recognition in the US, and perhaps most importantly, institutional exposure via the first-ever digital asset spot ETF. Number 5. ETH Spot ETF is a game changer. This needs to sink in. Ethereum has a US-approved spot ETF, meaning that institutions can easily gain direct exposure to ETH without having to hold private keys or custody their own ETH. This is a monumental development for long-term demand, especially in the RWA, real-world assets, and DeFi space. It gives ETH a massive tailwind and reason to outperform Bitcoin in the next few cycles. Number 6. Fundamental use versus market sentiment. Sure, ETH is down 65% from its all-time high, and people say it has no use case, but this is simply not true. ETH is still widely used in DeFi, stablecoins, and RWA tokenization. In fact, think about Solana when it was trading around $10. The narrative back then was very different from the one today. This is what happens when market sentiment flips. It can change fast. Number 7. Price targets and timeline. Using a 2021 cycle top as an example, we can project ETH reaching $10,000, $12,000 by mid to late 2026. This assumes BTC reaches 200K, 250K, and ETH BTC recovers to 0.05006. Keep in mind, the bull market could extend into Q2, Q3 2026. We are still in the early stages. Number 8. altcoins depend on ETH. If ETH fails to reach new all-time highs this cycle, it will signal the end of long-term altcoin investing as we know it. Instead, we'd be stuck in a market where altcoins only become relevant every 2 years or so and then get flushed out. So ETH needs to succeed this cycle, and if it does, all the EVM-compatible altcoins should reach new all-time highs as well. Number 9. The Fed liquidity pivot is imminent. Like mentioned earlier, the Fed will likely pause QT between May to October 2025. They've actually already started slowing down the rate of QT. In their most recent meeting, they reduced the runoff to just $5 billion per month. This is bullish for ETH. And once the Fed pivots back to stealth QE or full liquidity injection, the floodgates will open and ETH will likely rally hard. Number 10. Smart strategy: accumulate before liquidity shift. Right now is the accumulation phase for ETH. Prices are low, demand is low, and supply is high.